Hi, good morning, everyone. Good morning and a happy new year, and welcome to another exciting webinar from FCMB. My name is Gina Ndukwe, the head of BBG Remote Support Platform at FCMB, and I'll be your host during the duration of this webinar. So I see we have a few people that have joined already. We would like to, or FCMB would like to thank you for taking out time out of your busy schedule and joining us today. So wherever you're joining us from, please let us know. You can all drop your location in the chat box at the bottom of the page to indicate where you're joining us from. So I believe the first joiner today is okay, let's see, Adewale. Okay, no, before Adewale, I know I saw him at the chat box. He joined in from Ibadan. He joined us from Ibadan. Welcome. Thank you for joining this session. Do we have more joiners? Okay, this is Kingsley. We have Nkiru from Enugu. You're welcome. Ikita from Jos Plateau State. You're also welcome. Geoffrey from Jaji Kaduna. Thank you for joining. Lamsfold Montessori Ibadan. Thank you for joining. Yinka from Oshobo, you're welcome on board. Jubril Imran from Abuja. Thank you so much for joining us. Let's see. Chamaka from Lagos. Fantastic. Thank you so much. Francis from Aba, you're welcome. Samaila Tanko from Bello Integrated Service, Bauchi, you're welcome. Shade from Lagos, you're also welcome. Let's see, Olaiton from Maryland, Lagos, you're welcome to this session. Then Ed Beam Obere from Delta, Asaba, welcome on board. Olusegun from Ilorin, thank you for joining us. Vala from Kaduna, thank you so much. All right, we've gotten quite a quorum here, so we will be able to start the session shortly. So once again, thank you for taking out time from your busy schedule. Thank you for taking out time from your busy schedule, and thank you for joining us once again. So 2025 was a year that was actually imprinted in the mind of everyone here present. So as part of FCMB's ongoing commitment in supporting customers' growth, this webinar that we are having today is designed to help business owners reflect on the key lessons from 2025 and translate them into a resilient and sustainable strategy for 2026. So that's why today's session is timely and it's very important for us as business owners. As our topic, Outlook 2026, 2025 in retrospect, and building a sustainable strategy for 2026 is designed to help us pause, reflect, and most importantly, prepare for 2026. This session will provide practical insights on navigating economic shifts, strengthening financial and operational foundations, managing risk, and unlocking growth opportunities. As participants, you will also gain guidance on how to leverage financial solutions, advisory support, and strategic planning to drive long-term business stability and success. We assure you that this will be an engaging discussion focused on empowering you all as business owners with the knowledge and tools required to make informed decisions and build sustainable value for the year ahead. All right, so whilst we've all gotten that introduction, okay, we still have some people that have joined. We have Adewale. Adewale, you didn't state where you're joining us from, so we could acknowledge you. Oluwatosin, you're welcome to this session. Mohammed from Bauchi, you're also welcome. Okay, Elizabeth, you say you're not able to hear me. Please, can you confirm and check your mic? Okay, we have Okewe from Lagos. You're welcome. So please confirm you could all hear me. Stajani from Calabar, you're welcome. Elizabeth, please check the audio from your own end so you'll be able to hear me clearly. Thank you. Loretta, thank you for that feedback. Raphael from Port Harcourt, you're welcome on board. Okay, thank you. We've gotten a quorum stating they can hear me clearly. So let's move on to the business of the day. So our guest speaker is a professor of finance with over 2 decades of experience in development finance and financial markets. His work focuses on how financial systems can be leveraged to support inclusive growth, strengthen businesses, and drive sustainable economic outcomes in emerging markets. And these are the themes that strongly align with FCMB's commitment to empowering our customers. So we are delighted to have him share his insights with us and trust that today's session will provide valuable perspectives for our businesses and strategic planning. So before we call the professor, before I yield the floor to the professor, I think he stepped up a bit. So our guest speaker is Professor Babatunde Oke from the University of Lagos. So before I yield the floor to the professor, okay, we have a chat box at the bottom of the page. So during his presentation, you can note down your questions, then you'll be able to fill them down. Then we'll be able to ask the professor the questions, and he'll be able to give us practical answers real time based on the discussion he had. So Professor, are you ready with your presentation? If you're there. Okay, whilst you're waiting for the professor, Kaya from Abuja, you're welcome to the session. Patricia from Port Harcourt, thank you so much for joining us. Then let's see, Roka Farm. Okay, you didn't state where you're joining us from, so we could know. Kaya from Abuja, thank you for joining us. Christian, okay, you stated you can hear me, but you didn't state where you're calling us from. Okay, Oluwaseun from Lagos, thank you so much for joining. Olalekan, yes, you can receive the recording live. That will be after the session. You'll be able to get it so that you can listen to it further. So without further ado, we have Professor Babatunde Oke here to take us on the presentation. And do remember there's a Q&A box at the bottom of the page where you can drop your questions while the professor is making his presentation. So at the end of the session, you'll be able to get your answers real time. So Professor, if you're ready, you have the floor, please.
Thank you very much, Gina. Can I share my slides now?
Yes, you can, sir.
Okay. Good morning, distinguished entrepreneurs and business owners. We gather here today at a defining moment for the Nigerian economy. After the shock therapy reforms of the past 2 years, 2026 stands as the pivotal year of consolidation as we move from the high inflation, high volatility environment of 2025 into a period of projected stabilization. The fundamental question for everybody is no longer how do we survive, but how do we strategically scale? Today, we will explore how we can build a sustainable strategy for 2026. These actionable strategies are such that can propel businesses to thrive in a dynamic and sometimes challenging economy in 2026. So first of all, we will look at the key macroeconomic variables in 2025. And of course, we will look at some of the projections and how this will affect businesses in 2026 and beyond. So 2025 in retrospect, we have some key economic indicators. One thing that is very clear is the unanimity of experts that we've turned the corner. The figures are looking very good, unlike 2023 and 2024. Now we have better results in
Sorry,
looking at,
Professor. Sorry,
yeah,
Professor. Sorry to interject. Your
yeah,
slides, we can't see the slides.
you can't. That was what I
No.
was saying.
Yes, we can't see the slides
Okay,
yet.
I need to share it then.
Yes, please. Sorry for interjecting.
No, it's all right.
Okay, so this you just have to type it up. Just give us a moment. Professor is trying to share his slides, then we'll still continue.
I'm sure you can see it now.
It's coming up Okay, yes, it's up now. Thank you so much, sir. You
Let
can
me
go ahead,
show
sir.
them. So just like I was saying, we kind of turned the corner from the shock therapy that we faced in 2023 when President Tinubu took over. So we have some key economic indicators there. The indicators are showing us 2024 figures. Last year, 2025, mostly estimated figures, and of course, some projections for 2026. So starting with GDP growth, we've seen that the GDP grew by 3.8% in 2025 compared to 3.38% in 2024. But this is expected to grow by 4.49%. With respect to average inflation rate, it was 31.57% in 2024. By 2025, as a result of the rebasing, it went down. It was 21.26% average inflation rate in 2025, estimated really. And it's projected that by 2026, it's going to come further down to 12.94%. Other critical indicators, the exchange rate, the official exchange rate was 1,535 naira to the dollar in 2024. It came down. It's actually stabilized around that 1.5. And of course, it came down to 1,436 by December. That is year on year. 1,436.31 naira to the dollar. And for the parallel exchange rate, it's the same trajectory. It was 1,543 naira to the dollar. And of course, in 2024, in 2025, it came down to 1,452 to the dollar. We can see from the key economic indicators, of course, there are other indicators there, the foreign exchange reserves, that has gone up. It's in 2025, it actually peaked in over 8 years. It's reached $45.01 billion in 2025. That was the highest in 8 years. It's we also have oil production was 1.56 million barrel per day in 2024. It's moved up to 1.67 million barrels per day in 2025, still below the 2 million barrel per day quota, OPEC quota given to us. We're not doing well in that regard. it's expected actually that the reserves, the foreign exchange reserves, will cross the $50 million mark for the first time in years. You could see also easing. Inflation rate is easing. It has moderated, unlike what we had in 2024 when it peaked. But of course, we can ascribe some of this to the rebasing, and of course, the 2026 we expect a lot of things to happen. So we look at that much later. There's just a peep into some of the key macroeconomic indicators. Of course, we also can look at some other figures like the ones we have here, further, shedding light on the figures we just looked at. The exchange rate, like you've seen, 1,436.31 naira to the dollar. This is the reserve, the exchange rate reserve, the market capitalization, and the capital market, 99.43, 4 trillion naira. Inflation, exchange rate, monetary policy. You could say the effect of monetary policy tightening, using the monetary policy rate and other indicators to tame inflation. But we've seen, since the lowering of inflation, we've seen that it's been stabilized for a while, and we expect further easing, easing to occur in 2026 as we get more reduction in inflation, so that we can, boost the economy. Globally, the global economic growth also was estimated at 3.20%. So looking at what we have here, GDP growth rate of 3.98%. It's above the global economic growth. Is still below our expectation. Of course, we do know what is happening in the globally with the tension, trade tension all over the place. That's basically affected a lot of countries. The performance, of course, of the economy in terms of the GDP growth rate, it can be attributed to both the oil and the non-oil sectors. And of course, just like I've said, following the rebasing of the consumer price index by the MPX, we've seen that inflation has reduced, inflation rate has reduced. It also shows the better coordination between the monetary policy and fiscal policy. Initially, there wasn't good coordination, and that has really affected the way things were happening. So that gives us an idea of the 2025 macroeconomic situation in the country. We've seen, like I said, the crude oil, we're not really meeting the quota, OPEC quota. That's really been our bane. One major issue with respect to the macroeconomic variables is the total public debt outstanding. That has been increasing over time, and we're paying so much to service the debt. The total public debt outstanding was 33.98% of GDP as at June 2025. And of course, with domestic debt accounting for 52.86% and external debt accounting for 47.14%. Of course, the depreciation of the naira also affected the overall value of debt. Of course, the external debt, external sector, the performance of the external sector has been very positive. Like I did say earlier, the reserves, the external reserves have been very good. We also have surplus, balance of payment surplus of 5.80 billion in 2025. And that really supported the external reserves that we do have. So the relative stability in the foreign exchange market during the year buoyed by domestic reforms, higher capital inflows, and export receipts, as well as expanding local refining capacity. All these have helped the macroeconomic outlook for 2025. Apart from the debt issue, most of these indicators are really good. But we expect consolidation in 2026. Of course, looking forward, we expect that the year 2026 presents a realistic window of opportunity for macroeconomic stabilization. I must say that virtually every commentator, economic commentator, analyst, and experts of the same opinion. There's unanimity of opinion, as it were. The country has moved from where it stood in 2023, especially in 2024 when inflation peaked, and now we're getting into an era of stabilization. And what does that hold for the Nigeria and business in particular? The Nigerian economy is expected to continue to expand. It is, let me see, I think I have, okay. Okay, we can see some of the projections. It's expected that GDP will grow in 2026 to 4.49%. From the estimated 3.89% of 2024. It is expected also that average inflation rate will further reduce to 12.94% in 2026. That, of course, will be good news to businessmen because that's basically going to affect the cost of doing business, the cost of production. And when the cost is way down, even when revenue is high up there, it's not even moving. We expect that profitability will increase. So building a sustainable business strategy in Nigeria for 2026. This is the challenge that we have today. We have to project into the future. What is the outlook? What is the outlook for 2026? What are the key implications for businesses? The first thing to note is the lower finance cost. Of course, with inflation expected to drop in 2026 further, we expect a reduction in monetary policy rate to reduce, and when that is going to help to boost productivity, job creation, and what have you. We expect in 2026 also that tax compliance pressure will be on businesses. While tax reforms aim to simplify the system, the projected 30% increase in revenue means more aggressive enforcement and a focus on corporate transparency. Of course, we all know that the tax compliance um, is key to this government. We expect that businessmen will also key into this and pay their tax accordingly. There are a lot of reliefs and what have you available for taxpayers as well. We expect sectoral opportunities. We expect growth in, to shift from just extractive to services, digital economy, agro processing, and what have you. We also expect consumer resilience, that a projected rise in disposable income as inflation pulls will, of course, benefit business. That's to be expected. All things being equal, when inflation goes down, the disposable income is expected to be higher, and that will boost, consumers' ability, purchasing power, actually, and that's going to be good news to business men and businesses generally. Sorry about that. So apart from that, we also know that we will have some risk. We could have some risk for 2026. Execution is a problem. Policy reversal or reform fatigue before the 2027 cycle. I must say that I'm still going to look at the implications in details for businesses. We look at the strategy as well that businesses can, avail to take advantage of the opportunities that will be available in 2026. But it's very important to note that, as we plan, as we expect to project, things don't always work like that. There's this execution risk, the possibility, because we're going into the pre-election year. 2027 is election year, and we hope that there won't be policy reversals in 2026. We're also talking about global volatility. We hope that oil price shocks and supply chain disruptions as a result of global tensions will not affect us adversely. Insecurity has been a bane in this country for some years now, and until that is resolved, we may not be able to actually optimize the gains from 2025 and expected benefits in 2026. So building a sustainable business strategy in Nigeria for 2026, we're going to be looking at core pillars that will help businesses to achieve their objectives in 2026. Of course, to achieve sustainability, businesses should focus on some key areas. The first area we want businesses to look at is the vision, mission alignment. It's imperative for businesses to redefine their corporate vision to prioritize long-term social and environmental impacts alongside profitability. Businesses should not be short-termism, as it were, should have long-term focus. It's also imperative to look at institutional resilience. Businesses are expected to build governance systems that emphasize transparency, accountability, and ethical leadership to withstand potential policy shifts or economic shocks. It's very, very important. Accountability, transparency, and ethical leadership will help businesses to upscale in 2026. Also, operational agility. Business should implement systems and documentation to increase efficiency and predictability. They will allow leadership to focus on high-level growth rather than daily survival. This is the minimum that businessmen should note and incorporate in their businesses for them to really optimize gains from 2026. One other thing that should be done, another strategy that should be done is to assume moderate growth, persistent volatility. While it is projected that GDP will grow over 4% in 2026, it's better to still be conservative. Though I'm not sure we can achieve single digits. What was projected there was actually 12 digits. 12 point something percent in 2026. But it's still better to assume moderate growth in our projections and still expect that volatility will still be present in the system. Stress test scenarios is also imperative for business to, as much as possible, to model, naira depreciation, sudden tax, sectoral regulation, and security shocks as in the test scenarios. One of the problems that businesses had in 2023, of course, the shock was there, the sudden shock of the withdrawal of the subsidy. But one thing that businessmen and women actually do is to have the stress test done. This is very important to be able to incorporate, such shocks into their modeling analysis such that they'll be able to project if such things happen in the future, how will the business survive? Very, very important. Yes, as a finance man, I expect that financial and risk management strategies should be taken very, very seriously. We've seen that we are in 2026, actually, it's heralding the tax reforms act, all the acts put together. The 2026 is the year they kick in and all that. So it's imperative to be proactive, to have proactive tax planning and integrate tax consideration into every strategic decision. I expect every businessman and woman to have copies of the tax act, different tax acts as available, and should be able to see how these benefits affect the business one way or the other, so that they'll be able to maximize fiscal efficiency. It's also imperative to have, financing is very important, to explore long-term funding, such as equity financing, impact investing, and of course, strategic partnership to reduce over-reliance on high interest short-term capital. A lot of firms were affected by the increase in monetary policy rate, which of course they don't have direct impact on the firms, but basically it's affected both prime lending rate and of course the maximum lending rate, especially those who are using short-term capital. Many firms, especially the big ones, can look at the opportunity of getting floated in the capital market to be able to take advantage of long-term funds. It may not even also just be, equity. It can also be bond financing. There are so many opportunities in that space as well. In addition, we expect that it's businesses will tap sustainability-linked instruments. There are other a lot of instruments in the market now. Now, thank God, the Nigerian financial market is getting deepened. A lot of instruments, on offer, unlike a few years ago. So you have the green bond, concessional funding, as CBN and the development finance institutions are expanding these windows to be able to assist businesses. Also, resource management. It's imperative for businesses to focus on, water usage reduction, waste management, and improved energy efficiency to deliver immediate cost savings. That is the way to go. All manner of strategies that could be used to reduce waste and reduce cost should be explored. It should also be noted that farms should avoid over leveraging. They should prioritize cash flow positive projects and keep debt level manageable, especially FX denominated loans, because of the volatility in the foreign exchange market. This is in particular very, very important. Apart from that, another strategy for business in 2026 is to anchor strategy in macro realities. Okay, I think I've mentioned this earlier. Yes, another one is to build operational resilience, lean cost structure. Business should control overhead, reduce energy costs, optimize logistics and inventory to cost waste, which is very, very important. We can't afford to waste things in 2026. We can't afford to, it's imperative to reduce cost, especially energy cost. It's also important to have supply chain diversification. It's imperative to use local suppliers where possible, but diversification is very important geographically, and contractually to avoid single point failures, which is very important. When there's concentration, the possibility of having single point failure, it's very high. Another one is digital enablement. It's imperative to automate invoicing, collection, and inventory. To do that, businesses can use simple analytics for pricing and demand forecasting. These are some of the things that were emphasized last year. And there are a lot of ways this can be done. The major thing is to build operational resilience. This is an internal process that will reduce waste, that will help in invoicing, that will help in collection, and of course, inventory management. Very, very important. This process must start within the organization. Of course, we talk about sustainability. ESG is it. We're talking about governance. You should align with SEC sustainability guidelines, and in reporting sustainability-linked finance. It's also important when we talk about ESG to look at the social aspect of ESG. That's the second part of the ESG. So reduce energy and water use, explore renewables and circular economy modules like packaging, and of course to invest in community relations and social license to operate, especially in high-risk region, to reduce conflict-related disruptions. A lot of people put emphasis on the environmental and governance and kind of ignore the social aspect. It's imperative as businesses to be responsible, socially responsible. And that is why you have a lot of corporate social responsibilities being done. Even if the resources are not there to do so much, being a good neighbor will help a long way. So it's imperative to invest in community relations. Officials should, be trained in a way of having a good relationship with the neighbors, with those, of course, they interact with. Of course, it started, looked at the social aspect, but it's imperative really to leverage the ESG into core strategy. Practices is no ESG practices is no longer just about compliance, like we're being made to. Business have been made to. You have finance sustainability. Certain loans cannot be obtained without having all these things embedded into the proposal. It is a competitive advantage for attracting international capital. So it's not just about obtaining local funds. Can also get a lot of funding from international capital because it's part of their requirements. Also, it's imperative to, I think part of this has been said earlier, to reduce energy, talk about explore renewable, circular economy models in terms of packaging and waste, shift from expensive diesel generators to solar or renewable energy solutions to edge against energy price volatility, and of course, reduce carbon footprint. This cannot be overemphasized. Not only are they good for the environment, they are also good for the pockets, also good for cost reduction of enterprises and businesses. This will help to reduce cost of production, cost of doing business, and ultimately will affect the bottom line. When the cost is reduced, the probability that's going to affect profitability, increased profitability, and shareholders' wealth maximization, it's indeed very, very high. It's also imperative to focus on sustainable growth levers. Customer retention is key in a price-sensitive market. Deepen relationships, improve service quality, and use loyalty data instead of heavy acquisition spending. It behoves some businesses to get customer loyalty, to retain customers such that they'll be able to have continuous patronage, which is very important for long-term survival. It's also imperative to diversify revenue streams. Businesses can expand into related product services or export-oriented value-added lines like agro processing, light manufacturing, ICT services, and all that. So business, you also find way, businessmen and women, entrepreneurs should find ways of diversifying their revenue streams such that even if one revenue stream is hit, there are other options, other alternatives that could still keep the organization floating and doing well. As a matter of fact, it's also important to build talent. Capacity building is very, very important. Catch them young is a very popular slogan, and the university environment provides that avenue where businesses can, tap. We do have some of our students here being pushed by top organizations, even outside this country. Last year, one of my students got employed. The World Bank employed her actually, and also our husband were given employment, and we have Bank of America. It's a recurring decimal, so we give opportunities here for businesses to poach, to talent hunt, brilliant minds that will help, build organizations. Very, very important. This will help in sustainable growth and development. Of course, we did talk about this. We've been mentioned this earlier. So it's also very important to talk about governance and measurement. Governance and measurement. Businesses should set clear sustainability KPIs. Businesses should track metrics, important metrics, such as energy intensity, waste reduction, employment turnover, customer retention, and ESG disclosure alongside financials. It's not just enough to look at the financials. It's also very important to have clear cuts, to set clear sustainability KPIs, and this, of course, should be reviewed from time to time. It should be very important to guide the organization. Of course, the board level oversight, the board expected to review the ESG and reliance risk regularly, not just quarterly financials. That's the responsibility of boards of organizations in Nigeria. So in 2026, a lot has been said. We've seen some of the strategies that can be introduced to optimize gains of 2026. We expect that a lot of opportunities will come in 2026. Finance and risk management is very strategy, very, very important. Should also customer retention should be key to businesses. How do you retain customers? We always say customer is key. Customer, yes, is key. We should be, as business men and women, is expected that customers will be delighted. When customers are delighted, they surely will return. They will be loyal. And when they are loyal, you can be sure of continuous patronage, as it were. So that is very important. It's also very important to diversify revenue streams, talents, and capacity building have been mentioned. ESG cannot be overstretched. Talked about governance, of course, to build resilience. Businesses should build resilience. There should be supply chain diversification. Local suppliers can be used rather than importing the time of very high depreciation of the naira. 1,003, 1,004 to me is still high. So we expect that this will go down over time as we begin to get gains of those reforms of 2023 and continuous reforms that we've been having since then. So by and large, when these have been these strategies put in place by businesses, it is my belief, it is my opinion that businesses will be able to optimize the gains that will be available in 2026. Thank you very much. Thank you very much for having me. Over to you, Gina.
All right, thank you so much, Professor. That was really insightful, and I'm sure everyone is eager to hear your responses to their questions. So the chat room is open for questions. So if we can go to the Q&A part. Okay, let's see. Okay, so Aminat is asking Professor. Um, she says, thank you, Prof. This insight on leveraging ESG. Then I think she's asking, what's the meaning of ESG? Let's start from there.
Well, ESG actually stands for environmental, social, and governance. Environmental, social, and governance. It's sustainability.
All right.
Have I been able to answer your question?
I mean, I hope Prof has been able to answer your question. So as I mentioned, you can go to the Q&A box. It's at the bottom of this session, so you can put your questions there. So, Prof, we have a question from Star Journey Company. So the question is, Prof, please, how do we reduce energy costs when our company is on band A energy, which is very high? We need light for our bread mixers. So that's a question from Star Journey Company. Did you get that, sir?
Yeah. Yes, I did. I did. But you can use alternative energy as well. There are also alternative energy. One thing I do know is that in Nigeria, we're kind of wasteful. There should be internal control. You have to do that. We put on the lights even when we are not at home and things like that. These are things that kind of affect us. We should also use renewable energy. You don't necessarily have to rely on, on the normal, band A, band B, on our, okay? We don't normally have to. You can also have alternative, yes, sustainable, renewable energy. This is cheaper, okay? This is cheaper. I need to say this, I'm also on band A. I try to manage that while also use alternative energy. So one thing that should be done is to cut waste as much as possible. Look, let me say this. Many offices have all manner of printers in virtually every other office and all that.
Prof, are you still there? We can't hear you anymore.
Whereas one can have just way of reducing or cutting cost. You also change the bulbs. Some offices have, fridge, freezer, fridge all over the place and things like that. One can have a way of reducing some of these things. I believe that many, families and businesses have done this. I mean, because we are not, things have changed, from 2023, things have changed. We can still do more. It has to be an internal process. I'm sure if you can still find a way of reducing that cost. I hope I've been able to answer your question, sir.
All right, Star Journey. Thank you so much, Professor. So Star Journey, I hope that answers your question. So we have another question, Professor. This is from Samaila, and he or she is asking, what do you mean by stress test during your presentation?
Yes, stress test is very important. It's a technical test. I need to say this, for instance, the CBN governor, when it was bringing the policy, that circular to banks to recapitalize and all that, it mentioned that stress test was done, and they discovered that if that is not done, recapitalization is not done, we may have issues in future. IMF came to Nigeria together with the CBN. They did stress tests and all that. It is a test that is recommended for financial institutions, for organizations to do from time to time. What is done is that you you simulate shocks into the system and see whether the organization can survive if there is an external shock. For instance, a lot of people are having issues because of foreign exchange volatility. All of a sudden, you have price shocks. You have foreign exchange rates that hiked, and a lot of people could not, as have very, find it difficult to survive. You are struggling, and that is what stress test is supposed to do. You should project that, okay, what if the exchange rate moved to 2,000, 3,000 naira today? How will you survive? It's a technical stuff, but then it's done. It's done. Organizations, if you have an organization, encourage your organization to do that. So it's simulated into the whole thing. You can look at inflation. What if it gets to 50%? Inflation has been 57% before in this country. What if it gets into 57%? How will your organization survive? What strategies can you have? I must say that has helped us. You can imagine our banks are going to be so big, are going to have enough capital, bulwark, to hold on even when there are shocks, external shocks, they can stand because we're now being recapitalized. Look at the recapitalization. It's not just bring money, retain earnings, and all that. Some banks can just use their retained earnings to recapitalize overnight without any problem. But the emphasis is on fresh funds. Fresh funds. Don't use your retained earnings. You bring fresh funds. Let's have more, resources into this country, and we've been able to do that. Okay, we've been able to do that. So that is it. It's just a technical, it's analysis that is expected to be done, especially by financial institutions, such that with the to protect them against unexpected shocks in the future.
All right. Thank you so much Professor, for answering that question on the stress test. So another question is from Wachuku Akolisa. So the question is, how do we navigate the new tax implementation to archive optimal business growth, considering the high exchange rates?
Well, it depends on where you are in the tax structure, as it were. There are different businesses and all that. So you need to ask yourself, how does this tax law affect me? As an organization, how does it affect my organization? So there are a lot of gains, opportunities. For instance, some people are smiling. They are not paying tax. But these are low income earners. As professors, they've increased our salary, though we've not started earning the salary. We expect that we now pay more because it's progressive. So as a business, it's imperative to look at the tax laws, locate your organization in the tax laws, and ask yourself, how will this affect? And look at the opportunities. Look at businesses are usually better at taking advantage of tax enactment. Usually very better. You have tax, deductibility opportunities when you borrow and things like that. It's easier to have gains from tax as a business than an individual. You can file, you can do all manner of things. So I won't be able to say this is exactly how you can do it. A lot of things have been said about tax and all that over in recent times. Please situate the organization in this context and be able to take advantage. Just look at how you can benefit from that.
All right, thank you, Professor Nwachukwu Akolisa. I hope that answers your question on the new tax implementation. So we have a question from Adewumi, Professor, and the question is, how do we grow an ICT business as a starter in terms of share capital, loan support, and please, sir, can you suggest an organization that can help young, talented youths who wants to kickstart his ICT business in a one-stop shop? That's from Adewumi.
Well, ideally we have the venture capitalists. Venture capitalists are expected to help out, budding entrepreneurs and along north. If you have very good projects, these are usually available to assist. And I think some of them are operating in Nigeria as we speak. And that is their forte. That's really their forte. And I hope we'll be able to get help from them. I hope I've been able to answer your question.
Adewumi, I hope you're satisfied with the response from the professor. If you are, please send a message in the chat. So we also have another question, Professor. So this is Joseph, and he's asking that how can a petrol station make use of these concepts to improve their profitability?
Petrol station can reduce waste. Look at ways of reducing waste. Customer retention is also very important. Some of these petrol stations, the attendants can be funny. Very, very important. Everybody is conscious, is cost conscious or price conscious, as it were. And that is why everybody is going towards, the lower price petrol. So if Dangote is charging, if you are charging way beyond or above Dangote, I'm not sure you can be helped in this case, because pricing is very important. Okay, we are paying so much, tax and all that. My brother talked about band A and all that, energy costs, everything. We can't still even as it were, the price of petrol is still very, very high. And if yours is way above that of Dangote, I'm not sure you get so much patronage. So one of the things to do is to look at the pricing. Could you take advantage of the Dangote marketing strategies so that you also get, because that's the least pricing that we have in the market for now. So that is one. That's a strategy. You switch. You can also find a way of diversification, one way or the other. Some petrol stations are selling some things, some of the products, and all that. You can diversify. You can reduce waste. Customer relationship is very important. I did say that that can be looked at. Your financing is also important. Your financing is also very important. So these are some of the ways that you can. What else did I talk about? Yes, transparency, transparency, accountability, ethical. These are very important as well. These are very important. You need to be seen to be transparent. A lot of undercurrents happening in these petrol stations. I went to one. I wanted to buy petrol, and I was told that they will not accept my ATM card. unless I give them cash. And that was strange. That was strange to me. I couldn't buy petrol that day. That kind of action, will put people away. It's supposed to be a cashless society. I can't be carrying cash all over the place. I want to buy petrol. My pocket will be bulging of 500 naira notes because I want to buy petrol. So you can also, look at strategic partnership. You can look at strategic partnership. That's kind of arrangement with Dangote could help out, whatever that is worth. I think initially the arrangement has been with NNPC. People are looking at other partners and all that. That could help as well.
All
I hope
right,
I've been
thank
able to
you.
help you.
All right, thanks, Professor Joseph. I hope these strategies listed out by the professor would help in the profitability of the petrol station you are referring to. So, Prof, we have another question from Olusuji Abiala, and he's asking, how do you balance the purchase of fake spare parts and customer satisfaction? Because when you buy spare parts, even from a reliable source, but develop fault within a short period of time, the customer would not want to pay for the product or service. So Olusuji is asking, as a business owner, you have to be at the brunt. So how do you balance the purchase of these parts and satisfying the customer all at the same time?
Balance what? I know, I hear
Balance the
about
purchase when
satisfying.
you purchase fake products and the parts are not from a reliable source and they develop a fault within a period of time, and you also need to satisfy the customer. That based on your presentation, how do you balance satisfying a customer and buying inferior products from a vendor or a company that doesn't want to take it back? How do you balance it out as a business owner? That's what he's asking. Do I repeat the question? Prof, are you there? Prof, are you still there? Okay, it seems as if the professor has a bit of a
Well, it's
network issues.
you said
Okay,
it
he's
all.
still here.
You said it's a
Okay.
customer. Is that it?
Prof, if you can hear me, you're on mute, please.
I can hear you. Sorry, I don't know what happened to the network.
There's no problem, sir. Yeah, go ahead, sir.
I didn't. I was trying to understand that question. You said you bought fake products from a
Products
vendor.
from a
From a
vendor,
vendor.
and he wants to know how to manage the vendor not taking back the bad products and also satisfying the customer at the same time. How do you balance it out? Trying to make the customer happy, a customer that bought the products happy, and also the vendor that gave a bad product. He wants to know how to balance it out as a business owner.
Well,
Prof, are you still there?
I'm here.
Okay, sir.
I can hear you.
Okay, fantastic. You could go ahead, sir.
Okay. Sorry, some guys are calling. Yes. What I'm saying here, I'm a customer. I'm a customer to the vendor. Now, I bought a product and I sold that to my customer. So
Okay, Prof, you're actually going in and out, so we can barely hear you because of the network. Are you still there?
it should be to vendor accountability. It behoves on to
Okay, sorry about that. We are trying to get the professor's network back so it can be stable. Are you still there, Professor?
I'm here. I'm here. I don't know. That's
Okay,
one of the
is it
problems.
better now from your end?
Yes, can you hear me?
Yes, it's clearer now. Thank you so much. You could go ahead, sir.
Yes, what I'm saying is there are two vendors. I mean, there are two customers here. My customer. Then the customer, I'm a customer to the vendor. So for transparency, accountability, I need to do a refund. But then it depends on the policy. The policy is very clear. Some people will tell you once the product is bought, there's no refund. Once you've picked, you've paid, and you've got, there's no refund. Does it have a warranty? These are some of the questions that will be asked. So if you've picked up the product and you've gone, then you don't need to get the refund. But ideally, because it's a fake product and you bought it unknowingly that it's a fake product, it's better to refund your customer and find a way of getting to your vendor and get to him. If it's your regular vendor, it will oblige you. Basically, something is wrong in that relationship is where it should be, tidied up. It should be tidied up because is it a new vendor? Is it your regular vendor? A new vendor will not, I mean, a regular vendor will not knowingly sell fake products to you. Ordinarily, I think that's the way it should be. Then, of course, your customer, especially if it's a loyal customer, you won't want to lose him for anything because it's more difficult. You pay more to get a new customer than to retain an existing customer. So it has to be balanced, really. It has to be balanced. Is it a new customer? Is it a loyal customer you want to maintain? Even outside that, it behoves on you and with good conscience to pay back because it's a fake product, but you sold it to him unknowingly. That is a fake product. I hope I've been able to answer your question.
I hope so too. I'm sure you'll be able to send a message in the chat to confirm that. So we have a question from Adeni Adewoye. So he's asking, is there a role insurance can take in group determination, given that payment process is almost at the same value of the GDP? How do businesses harness this for real GDP impacts?
Please come again.
Okay, so he's asking, is there a role insurance can take in growth determination, given that payments process is almost at the same value of the GDP? How do businesses harness this for real GDP impacts?
Well, that's I don't know much about insurance. I won't be able to answer that very much at the moment. But basically, insurance is very important uh, component of the financial sector, and a lot has been done in that sector to help, to provide risk mitigation for businesses. So as they do that, they contribute meaningfully to the GDP in service delivery and customer satisfaction in their own way. They've helped a lot. We're talking about green finance and all that. A lot of businesses are standing today because of the undercovering provided by, because of the insurance provided by the insurance company. So it's a very important subsector of the financial sector, and I think they play a very important role. They are not subservient. As a matter of fact, in some climes, the insurance companies dominate. They are the ones that buy banks and all that. Are very, very important. So insurance companies are quite insurance companies are very important. I hope I've been able to say a little about the insurance company,
I hope you have too. If it's stated otherwise, we'll be able to share that with you. So Nkiru Kizo is asking, based on the presentation you made, that if you could suggest ways the principles you mentioned in your presentation can be effected in a private hospital.
Private hospital, very important. I did talk about cost cutting. I did talk about energy saving. These are very important. Renewable energy. Service delivery is also very important. Customer satisfaction, very, very important. We do see some hospitals, the ways some of these people act can also be very, very important. The way they act can also be a problem. Very important. So financing is also an issue. You have to find a way of, because hospital health finance, it's pivotal. Health finance is pivotal, because a lot of drugs are imported. Quite a lot of drugs are imported. You need money to be able to import some of these drugs, and when the foreign exchange has depreciated substantially, it's basically will affect many farms, many hospitals. I hope the local hospitals are not patronizing, some of these some of these pharmacists that are selling some of these drugs and all that. Very, very important. So one of the ways of doing some of these things, you need financing, and you look at alternative financing sources to be able to optimize that. Of course, don't over-leverage. Don't be over-levered. Of course, that the financing mix. Don't be too highly geared, so that there are not going to be too much problems. Ensure, of course, transparency, accountability, and all that. How do you source your drugs? Very, very important. All those, your input, the drapes, the drugs, everything. All these are very, very important that should be looked at. Talk about customer ESG, corporate social responsibility, also part and parcel of the whole thing. Should be socially responsible. That is another thing that can be done. What else? Risk management. It's also very important. Risk management. So that's it.
All right. Thank you so much, Professor Nkiru. I hope the suggestions made by the professor should help in the private hospital you're referring to. All right. So we have Solomon. So he mentions that in your presentation, you stated the projected oil production is 1.71 MTPD by 2026. That please, could you outline the strategies already in place to achieve this production level?
Well, that's the government stress, actually. We do know that one thing that baffles me really is the fact that we need money and we have ready-made source of money and we are not optimizing. That baffles me. What I mean is we have, I think, 2 million barrels per day quota given to us by OPEC. And yet we are not maximizing. We should even be begging OPEC, please let us increase our quota. Because the more the ready-made money is there for us. But then we know the challenges that we have, all these disruptions, all these thievery, all this stealing, all these, destructions at the of pipelines and things like that. That is a problem. Uh, I think it's a government has to tackle that. I know the Tompolo is being paid to do some things, some work in that area to be able to reduce, that to the barest minima. We have the Navy, we have all those. I don't know how that cannot be done. I did also talk about innovate, talk about digital. Some of these things you can use drones, you can use, those digital items, digital tools to be able to monitor. We are not in the 15th century where you just have to be there physically. I know some people, they're in Lagos, yet they monitor their fields thousands of miles away. They can see with their device who goes there, who goes where on their fields. They can see. And there are devices, we've been told that there are ways of seeing everywhere. So these are things that should be tapped in, that should be utilized to be able to reduce waste, to be able to increase production, so that we can take advantage of the quota and get money. The money is there. I mean, we should just sell. We should just meet our quota, you sell, and we make we're able to help rather than borrowing all over the place. Don't forget, we are selling, we're getting FX, and what have you. So rather than just borrowing all over the place, if you move this up, thank God it's been moving up. It used to be very low, even sometimes less than 1,000. 1,000, per day. So 1 million, rather, 1 million barrels per day, sorry. So it's very important that we do that. That is one area that should be done, and it is the government's responsibility. You have officers, you have those who can, help to ensure, tighter security. You can use digital tools to be able to monitor. I mean, it's not rocket science. It's 21st century.
All right, thanks, Professor. Let's take one final question. So this is from Mafiana Precious. So the customer is asking for a farmer association trying to change the narrative and also align with government policies. What areas can you advise for them to look into for a sustainable growth and creating impacts?
Yeah, farmers association. Incidentally, I also have a farm. But one thing that should be a major that should be key to the association is that issue of security. I have a farm somewhere in Oyo State where I hardly go there now because of the insecurity issue. One time, my farm was raised. The herders, the cows, whatever, they just ate everything, and the whole thing was raised. Not an acre. I know what I suffered. You know how much it cost, to plow using, the tractors and all that. And it's the environment. We've had about kidnappers here and there. I still belong to the association, and we are on WhatsApp and things like that. So it's imperative to let government ensure that there is security. Very important. We cannot also ignore the activities of the locals. You have to be mindful of that. We talk about headers, we talk about the Fulani and all that. What if it's the local is a local problem? What if the local Abiola, Kamoru, they link up together, wear Fulani dress and start kidnapping and all that? What if that is exactly what is happening? So security is pivotal. It's very important. The association should look at that. Should also say how I think I did talk about tractors. I think Oyo State got some tractors in could also help to reduce the cost because it costs a lot to plow an acre, for instance. And if you have multiple acres, you'll be paying more. If you are not, well boxed up, that could be a barrier. But as an association, you can form cooperative society and be able to access some loans and things like that. Very important. I do know that BOI and some other organizations are also very helpful. We also have cultural impact of Greek and things like that. Of course, quite a lot. Sometimes some of these are politicized along the way. So association must work very well with the government. If you are in an environment that insecurity is not an issue, I think you are very lucky. Get the roads also. The farm roads are usually very, very bad. The farm roads are usually very, very bad. Get government commitment to get the roads, to be at least passable. There was a time I was going to the farm and we had to turn back. The whole place was so slippery, in spite of the fact that one was driving a truck. It was very difficult to navigate, to even get to the farm. It can be really bad. A lot of crops, a lot of produce are spoiled because of transportation, even to the farm. And that is why sometimes we get to the farm, some of these things are sold cheaply. So there are a lot of things, about agricultural productivity and all that. We can also get the assistance of government to move to the next level. Processing is very important. Processing, let government help assist to see how can help you in setting up processing or to assist so that you organizations, farmers and all that can set up processing plants and all that. That will come, we'll be able to get higher values than the pure simple farm produce. I hope that will help.
I hope that helps Precious and his farming business. So, yes, I hope it helps Precious. So, there have been key takeaways from your presentation, Professor. So, this is for the participants and our business owners. So, to be able to improve our businesses for 2026, key takeaways from this session is we have to assume moderate growth in our businesses. We have to have proactive tax planning, diversified funding, operational resilience, and focus on our sustainable growth. All these are major takeaways that we could use for our strategy for 2026. So this apparently concludes our webinar for today. And let's see on the chat. I know we didn't get to all the questions, so we are going to get across to each and every one of you. I've also put on the chat the email address for any further questions you might have, and we'll be able to answer them and get back to each and every one of you. The recording will also be available for those that were not able to join on time. The slides will also be there. The SME advisory unit at fcmb.com. The email is there for all inquiries concerning the webinar and any other business advisory you can also need. So thank you to everyone who attended and contributed to making this session a memorable one. Your questions were beautiful, the responses all insightful, and we sincerely hope that you found the webinar as insightful and engaging as you did. Our special appreciation goes out to our speaker, Professor Babatunde Oke, for generously sharing his expertise and valuable perspectives. So on behalf of everyone at FCMB, thank you for your participation, and we look forward to welcoming you to our next webinar series. Wishing you a pleasant rest of the day. Thank you so much, and enjoy the rest of your day. Thank you.
Thank you. Thank you, Gina. Thanks for having me.
Thank you, Professor.
Thanks for having me.